If the Fed is so powerful and if they're so good at doing their job, then why is it that we're still even talking about 2% inflation? I believe they know they're relatively impotent from a standpoint of having a direct impact on asset prices, which I think is their only game. I think they recognize the economy is built on asset prices or asset bubbles, debt and confidence. And so they have to instill confidence, and it's a game of expectations. I don't think the Fed, I know the Fed doesn't have direct control over the stock market as of yet. They're not buying stocks, and who knows what they'll do in the future. I wouldn't put it past them. And yes, I think they can have quite a bit of control over the actions of the market participants from a standpoint of they'll say, okay, we'll come in and backstop the junk debt market by setting up these special purpose vehicles and buying junk debt as an example. Then all of a sudden you see the market go up. But the Fed didn't buy that much junk debt to correspond directly with how much prices went up. So the market participants had to take an action there. At the end of the day, the Fed can really do one thing, and that's just create bank reserves. So they're dependent upon other people taking an action. Therefore, their game, and I think they understand this well, is all about psychology. It's all about expectations. And if they want to create inflation, they've got to do that by trying to trick the market into thinking that the Fed has all this power, that they're the wizard that's just going to wave this magic wand. And the Fed is going to let inflation run hot. Well, we better go out there and we better get moving. We better buy assets. We better go further out the risk curve. We better buy equities. We better pile into all these things because the Fed is going to create inflation. When they forget that the Fed has been saying this for a decade, 12 years now? And why is it, if the Fed is so powerful and if they're so good at doing their job, then why is it that we're still even talking about 2% inflation? By this time, we should have been up to 5, 6, 7, 8, 9, 10% inflation. Now, a lot of people would argue that we are, but I'm just talking about, let's just shelf that for a moment. Even measuring inflation through the CPI, the way the government and the Fed measure inflation, we should still be up north of 5% if all of their policies actually worked and if they were so powerful. But the bottom line is they aren't. And I think they know that. And unless they change the Federal Reserve Act or they just completely ignore it, which I think they will moving forward, then we're kind of stuck in this Japanification, whether they like it or not. And so it just goes to show you that they don't know what's going on and they're just completely reactionary. But I think they do know enough to know they don't know what's going on. They know what they don't know. And the only thing they do have control over is just expectations. And they do have the advantage of the media brainwashing us for the last 20, 30 years since Greenspan. Oh, don't worry about it. You got the Fed put. Oh, don't worry about it. Don't fight the Fed. That's what Jeff and Brent were talking about. And it totally makes sense that once you get behind the curtain and you see what's really going on back there, you're like, wait a minute. Okay, we really don't have any control. So unless we want the S to hit the fan, then we need to come out here and more job owning, to your point. We need to pretend as though we're all powerful and we can just create inflation just like that, because then we know CNBC and BBC and Bloomberg, and they're all just going to run with the story. And that's going to make market participants hopefully do what we want them to do. So I think that's kind of where they are. And that's how I think if you look at it from that standpoint, from a game theory, you're able to kind of, I think, better place odds on what the probabilities are of XYZ happening in the future. How will we know that there's truly been an economic recovery in the United States? And Jeff's conclusion was that if no one knows the name of the central banker, or no one knows the name of the Fed chair, then you know the economy is doing well, truly doing well. The most important person on the planet, like every single time they talk, like everyone is just in silence, just glued to the TV screen, just trying to decipher every single one of their words and everything that comes out of their mouth. That in and of itself shows you how broken the economy actually is. Because if we had a true free market, a healthy free market economy, it really wouldn't matter what the Fed was doing. I mean, you think that through. If the economy was truly healthy, from a standpoint of we were these SMEs that we were just talking about in our earlier discussion, that these small and mid-sized businesses, that they're out there creating jobs, that they're creating more goods and services, that they're increasing productivity. If we had Schumpeter's creative destruction, if all of these things were happening, and they raised interest rates by 25 basis points, from, let's say, 6% to 6.25%. But now, of course, and I think it's because the economies are so fragile and that they're not healthy, that every single 10 basis point move or 25 basis point move by the Fed is just front page news, because that could be the catalyst that just tanks the economy. And you think back to when they were doing QT, they meaning the Fed, and they're trying to unwind their balance sheet, which was supposed to be like paint drying. And all of a sudden, the stock market starts crashing. We start seeing this meltdown everywhere. And they're like, oh, sorry about that. Let's drop interest rates real fast. And now that we're in this kind of COVID mode, we just think that, it's just not too far back, that's kind of the catalyst to this downtrend or the most recent downtrend that we've had in interest rates. But no, the Fed was dropping interest rates way prior to COVID. And so again, like we said in our last discussion, that the COVID is just kind of that's the straw that broke the camel's back. The economy was structurally flawed long before COVID. And I agree with a lot of the experts out there that I talk to that say really the economy was broken during the GFC. Leading up to that, the GFC, it was just just showed us how bad and how broken it was, but it's never been fixed. It's never been fixed.